Markets rally once again on the hopes of a Fed pivot. They are trying to talk Powell into pausing and or pivoting. So let's take a look at what's going on and see what is happening. So Dow up again, 2.8 today, S&P up 3%, NASDAQ up 3.34%. So another nice little bounce. It's the S&P posts the best two-day gain since 2020. So 2.5%, 2 days in a row is the biggest gain since 2020. And guess at what point in 2020 that was? It was coming out of the March pandemic when the Fed jumped in and juiced the market. So what can we expect moving forward? Well, one thing is why the Federal Reserve won't be so quick to ease up on its fight against inflation. So the markets are trying to talk the Fed into easing and into maybe even pivoting, but the Fed has to stick the landing. It's the lower end of the economic ladder that is going to bear the burden if the Fed doesn't stick the landing correctly. They lose jobs and their spending goes down, and they have to draw on savings to make ends meet, which reduces demand, which reduces earnings, which reduces the stock market even further. Prices for everyday items have been surging at an extraordinary clip. Food, gas, even gas is back on the rise again. Oil's going up a little bit. The risk of failure as it stands, the economy is quite likely headed for a recession no matter what. The question is, how much worse can it end up? It's not a matter of if, it's not a matter of when. It's the matter of how long and to what degree that happens. And if the Fed overdoes it, you'll have a much deeper recession with higher unemployment. Cathie Wood is still calling for deflation. And there is a disconnect between the hope in the market and the reality of the Fed, says Roger Ferguson, former Fed member. And he is saying that hope is not a strategy. And that's what we saw today, was a nice little bounce on the hope that the Fed, based on what the Bank of England did and other things that are going on, that the Fed is going to have to slow down. We saw that jobs report came out today, and there was 1 million less open positions, but there's still 2 to 1 out there, positions to people looking. So that still has a long way to go. And we've seen some other indicators that the economy is softening a little bit. House prices starting to correct, rents coming down in some markets. But again, these are all correcting from astronomical levels. So long way to go yet. And the market is doing what the market does. Here's the trend line we've been watching on Bitcoin here. And right now, broken above the downward trend line. So the question is, are we going to see a back test and then continuation, or is it going to reject, close below, and break back down below that 2017 high? Getting close to that 20,500 number that a lot of people are targeting for a potential rejection and reversal back to the downside. So watch that 20,500 level on Bitcoin to see if it can sustain and continue on from here, or if you get a rejection, which we kind of did right at 20,370, and then continue back down from there. And then as far as the markets go, let's take a look at traditional markets. And I've got a couple of little things I'm watching. Here's the Dow right here. And this is the current trend on the daily that we're watching to see if the market can get up above that and kind of continue this rally on like it did back here in June. Or is it just going to be another little 5% bounce? We're right at about 5.5, 6%, depending on which index you're looking at, kind of like we did back in early September. Maybe it hits the trend, maybe it doesn't, and then continue for more downside. We'll just have to wait and see how high and how far that bounce is. This is the S&P, had the largest bounce back in September. That was 5.9%. Let's see where we're at today off the lows. And this bounce comes in at 5.76%. So still holding below, well, it's back above the June lows now on the S&P, back above the June lows on the NASDAQ, and broke back above the June lows on the Dow. And then let's look at the weekly averages on everything and see where we stand. The Dow closed above the 200 weekly, NASDAQ closed above, S&P has maintained support above the 200 weekly, which is your key moving averages for all the indexes. Bitcoin still well below that 200-week moving average. So we'll have to continue to watch and see what happens there. Let's take a look at Ethereum real quick. The altcoins are losing a little steam against Bitcoin right now. Ethereum kind of ranging in this ballpark. Avalanche doing the same thing. Solana, Matic, Cardano, all kind of ranging and just kind of hanging on to these areas here, just like the rest of the top altcoins. Ape, let's look at ApeCoin. Still kind of hovering, moving along, consolidating in this area, trying to put a bottom in. But again, we still have a lot of risks out there with what the Fed is doing and with other global macroeconomic geopolitical events that we are monitoring, and potential escalation in Ukraine from Russia. So we'll have to see how these things shake out over the next few days and look for tomorrow. And what will tomorrow bring? Are we going to see a continuation of the rally, or is this 5 to 6% bounce all the market has in for it? And are we going to see the Fed members come out and talk the markets back down off this hopium cliff once again, like they did last time? The Fed does not want to see loosening of financial conditions. They want to see tightening, which means market rallies are not what the Fed is looking for. They want to see continued corrections in the housing market, rental prices, inflationary pressures, and of course, they want to see more tightening of financial conditions in the market. So expect the Fed to come out and say, you don't get it, we're not stopping, we're not pausing, we're going to continue our rate hikes, we're going to keep them higher for longer, just like we said. We haven't changed anything. Don't know what you guys are thinking about, looking at, or talking about, but we haven't changed a thing. So that's what it's going to take on the part of the Fed to pull the steam out of this market. So we'll have to see if they do that. Until then, and if they don't do that and the narrative continues of a Fed pause, Fed pivot, then the market can continue to rally. So unfortunately, that's just the environment we're in a bear market, in a risk-off environment. It's the little narratives and rumors that drive big market bounces, and then continuation to the downside. And again, when are markets going to turn around, stabilize, and put in a permanent bottom? When inflation comes down and the Fed is able to stop. Markets right now are telling the Fed to stop. Even the UN is trying to tell the Fed to stop. The Fed so far has said, we're not stopping. So these are the things I'm looking at. I'll see you in the next video.